FHA loans get a bad rap, but are they actually the best loan for you? Or should you wait until you have more money to put down and go conventional? In today's video, I'm going to discuss when you should buy using an FHA loan and when you should wait. Now, to be very, very clear, this video isn't to push you to go out and buy a home, but rather help you decide which is the right option if you're already on the fence. But with that said, if you are considering using an FHA loan, drop your biggest concern in the comments and I'll make sure I address it. As you probably are aware at this time, if you've watched any videos on FHA allows you to buy a home with as little as a 500 credit score if you have a 10% down payment. And at the same time, they'll allow you to purchase with a 580 credit score if you have a 3.5% down payment. But here's where I'm probably going to make a lot of enemies, and I don't think you should be buying a home using an FHA loan unless you have a credit score greater than 640. And the main reason for that is because the terms completely change once your credit score gets above that threshold. And so while FHA may allow it, what I will say is a lot of lenders out there that do FHA loans have overlays on their program. So even though FHA allows these lower credit scores per their guidelines, most lenders out there don't actually do them. So when you do find a lender that allows these lower credit scores, you're often paying for it in a higher rate and often higher fees. In addition to that, the underwriting process is way more stringent with lower credit scores, and that's because it requires a manual underwrite. It requires an underwriter to actually go through that file in a lot more detail to make sure you qualify. So if I were somebody out there that had these lower credit scores, instead of buying a home now, I would actually focus on trying to improve my credit score to get it above 640 so that you're getting really, really close to the best terms that FHA offers. And the reason I say this is because it's pretty easy to get your credit score to go up. There's nothing that these credit repair companies out there are doing that you can't do on your own in order to help raise your score. Now, with that said, I wouldn't go out there and pay a lot of money to one of these companies to help raise my credit scores either, because there are a lot of these companies out there that take advantage of people with lower credit scores. The people that need help the most are often the ones getting screwed over by those companies trying to help them. And instead of throwing these companies under the bus, what I'll say is you've likely heard their names out there on the internet. So if you do decide to go through that credit repair process and hire a company to do it, just make sure you're using a reputable company. Read the reviews. In addition to that, they shouldn't be charging you some large fee up front in order to help you repair your credit. And the last thing I'll say about this whole credit repair thing is don't do any sort of credit consolidation, because at the end of the day, this isn't going to help you in a positive way. So if I were somebody considering using an FHA loan, the very first thing I have to take into account is credit score. If your credit is above 640, then I would say yes. Assuming you check all of these other boxes, then yes, you should proceed buying a home using an FHA loan. If your credit score is currently below 640, then not only should you be waiting versus using an FHA loan, you should just be waiting in general. Even if it takes you a couple of months, maybe even a year to get that credit score up, what I can tell you is the terms are going to be way more favorable, likely making it worth the wait. Now, the next thing I want to talk about is having stable income and stable employment. I often get people reaching out on my videos in the comments asking different questions about what you need with regard to employment. You know, I've only been on my job a couple of months, or I just graduated college and now I've only had a job for this period of time. Can I buy a home? Well, the guidelines for FHA and pretty much most loan programs out there require you to have 2 years of consistent employment and consistent income, which means if you've never had a job and you're just now getting employment, then not only are you likely not going to qualify, you're really not in a position to buy a home. Now, when it comes to this consistent employment, a lot of people get it wrong. You don't need to be on the same exact job for 2 years. You can have changes in employment, you can have changes in your position, but ideally you're not going from a wage earner to a fully commissioned job. Where a lot of people make a mistake is they want to become an entrepreneur, they want to be self-employed, and they leave their job and they go out and start a business, or maybe they start driving for Uber or doing something where they're basically getting paid in cash, or in some cases it's not documented. Well, that can actually impact your ability to purchase a home because you need to be able to document that income. You need to be able to show it consistently over that period of time. So if you're currently in a position where you're just graduating and you're just getting your first job, you can use your education as part of your employment. But here's what I would say. If you're in your early 20s, there's no rush to go out and buy a home. I would rather you focus on starting your career, starting to build that foundation, starting to save some additional money versus rushing into the housing market. Now, I know there's a lot of videos currently online about house hacking and you have to start early and to become an investor, all of this sort of stuff. And what I would say is you have plenty of time to become a homeowner. There's no rush to go out there and do it. In fact, you should never rush into this process. You need to make sure you have stable income, stable employment, decent credit, because otherwise you're likely setting yourself up for failure. And with that said, I like people to have a solid foundation when it comes to buying a home, whether you're using FHA or you're using conventional. You need to have that foundation. It needs to be the right time in your life. You need to have employment stability. You need to have relationship stability. You need to have job stability in general, knowing that you're not going to get transferred out of your current market into another market or you're leaving in a couple of years. And the reason I say that is because you really need to be thinking of owning your home for at least 5 years, especially when it comes to an FHA loan. And I would even go further and say maybe 7 to 10 years you need to own that home. And one of the main reasons I believe that is because the housing market has gone up so much over the last couple of years. So there's a really high likelihood that we see home prices flattening a little bit, that we don't see that 5+% appreciation. Rather, that we see appreciation move lock in step with inflation, which means 2 to 3% annual increases. And I know you're probably watching this going, well, Jeb, I want to capture that 2 to 3% gain in appreciation. I don't want to miss out on any potential appreciation. But here's the thing about FHA loans, is that they have something called upfront mortgage insurance. So when you decide to buy a home using an FHA loan, regardless of your credit score, regardless of your income or anything else, you're going to have upfront mortgage insurance on that loan. It's 1.75% of the amount that you're financing. So in the case that you're buying a $500,000 home, you're putting 3.5% down. That's $17,500, which if you were doing that quick math, you're financing $482,500. But here's the thing. FHA requires that upfront mortgage insurance of 1.75%. Now, this is not in addition to your down payment. It basically just takes half of your down payment away, if you will. So in the case of this example, that's $8,444 that gets added back on to that $482,500, which means you're financing $490,943. So in the case that we have a flattening market, homes aren't really appreciating at any rapid pace, that means you have very little equity in that property. So if you decide to keep it safe for less than 5 years, then there's a chance that when you go to sell that home, you could be upside down once you take into consideration compensation, title, escrow fees, any cost to sell that home. Now, as long as you keep that home, you don't have to worry about those costs. But if you're only planning on keeping that home, say 3 to 5 years, then there's a chance that you're going to have very little equity because of how that mortgage insurance works. Now, with that, I'm going to give you one bonus tip. If you have a credit score higher than, say, 780, and you're considering doing an FHA loan, you might also consider a conventional 3% down loan, because that way you can avoid the upfront mortgage insurance premium that FHA has, because conventional doesn't have that. So you're not going to give away part of your equity when using that conventional loan. But here's the caveat. Even though you have that super high credit score, there's a chance that the FHA payment is still going to be less than that of the conventional loan. But if you don't want to give that equity away, conventional is going to be the next best option. But here's my recommendation. When you're going through that process and you're getting pre-approved or you're talking to a lender about different loans, have them put all of your loans on the table that you qualify for. That way you can decide which loan best fits your needs. You can see how much the monthly payment is, how much cash you need to bring in to close, how much equity you're going to keep in that loan. And that way, ultimately, you can make the best decision for yourself. Now, if you're watching this, you don't know where to start, my team and I have helped hundreds of people here on YouTube get into all types of loans, especially FHA. So if you want to get in touch with me and the team, do me a favor and use that link in the description. Now, the next time I want you to consider buying versus waiting is if you have money in addition to your down payment and closing costs. And what I mean by that is if you have your built-in reserve fund, if you have 3 to 6 months of your new monthly mortgage payment in a checking or savings account there after you're going to pay that down payment and closing costs, then you're probably ready, at least financially, to make that move, assuming you're comfortable with that monthly mortgage payment. Now, that's the thing. If you're buying in this market, you have to be buying with the expectation that that is going to be your payment, that rates are not going to be any lower, that you're not going to be able to refinance. No, you're not dating the rate and marrying the property. And the reason I say that is because there's a chance that rates stay higher for longer. But at the same time, there's always a chance that they move lower and that you're able to take advantage of it. But I don't want anyone buying a home in this market only buying with the expectation that they're going to be able to do that to make the payment more affordable. So you should only be buying if you're comfortable with the payment. You don't have to like it. You just have to know that, hey, if this is what it is, then I can make it every single month because I have money in the bank, because I have job stability, because it's the right time in my life, all of those different things that we discussed. Now, before we dive into the reasons that you should wait if you're considering using an FHA loan, I want to take a minute here and actually talk about mortgage insurance and the idea of it being a ripoff. Because honestly, it's one of the biggest fallacies and it's very misunderstood when it comes to buying a home because people just assume that you shouldn't buy a home if you have less than 20% down. That's the only way to go. And that if you don't have 20%, you should wait. Well, here's what I'll say. I don't believe that to actually be the case. I've had a lot of clients buy using FHA loans as well as conventional loans, putting less than 20% down, having mortgage insurance, and have been able to refinance in the future out of those loans and get rid of the mortgage insurance entirely because that home appreciated, because you now have 20% equity in that property. Now, in many cases, it's not going to happen as quickly as it's happened over the last couple of years, but the way I look at mortgage insurance is that's the cost of doing business. If that's the only way that you can buy a home and you're comfortable with the monthly payment and you're comfortable with everything associated with it, then that shouldn't be a holdback for you. And another thing that people don't understand when they compare FHA to conventional loans is that FHA loans typically have about a 0.5% better mortgage rate than that of conventional loan. And once you factor in the monthly mortgage insurance, many times that effective rate, which we're saying the interest rate plus the mortgage insurance on FHA, is going to be less than the conventional loan, because the conventional loan, you're still going to have mortgage insurance as well when you put less than 20% down. But the biggest difference in the conventional loans versus FHA is once you get 20% equity in that property, you can call your lender, have an appraisal done, and assuming you have that equity, you can actually have that mortgage insurance removed. But here's the downside to FHA. FHA loans, that mortgage insurance is on the loan for the life of the loan, unless you put at least 10% down, which in that case, it falls off after year 11. But here's what I'll say. Most people don't have their loans that long. And if you get equity in your property, then you can just refinance out of that mortgage into a conventional loan where you're not going to have mortgage insurance at all. So in my opinion, the mortgage insurance thing shouldn't really be a factor in keeping you from buying at all, because you're not going to have that loan forever to start with, and this could get you in the door. This could be the step for you to become a homeowner. So if you think you're ready to start that pre-approval process, make sure you check that link in the description. You can chat with me and my team, and we can help you decide if buying using an FHA loan is right for you. So when should you wait? When should you not buy using an FHA loan? Well, the very first thing I want to say is if you're buying because of pressure, you're not really ready. If you're just buying because you've heard it's the right thing to do, people are pushing you to buy a home, they're telling you that prices are just going to keep going up, it's just going to get more expensive, you've got to get in and do it now, or something along the lines of renting is just throwing money away and I just got to stop doing that, I got to own a home. But you're not really at that point in your life where you have financial stability, you have relationship stability, you have credit scores above 640, some of those things that we're going to talk about here in more detail. If that's the case, then you shouldn't be buying a home. You should be working on some of those other things, building that foundation so that when the right time is there, you go out and decide to buy. Buying a home is never about FOMO. It's always about buying when it's the right time in your life. And we talked about this earlier, but if your credit score is below 640, in my opinion, you shouldn't be buying a home. You should rather be focusing on improving your credit score, trying to get that credit score as high as you can, ideally above a 680. Yes, I said below a 640 a moment ago, but above 680, if you're going to use FHA, is going to get you the best terms out there. And if you're trying to use conventional financing for any reason, then you really need to be above a 780 to get the best terms. And the reason I focus so much on credit score is because it's going to save you thousands of dollars. It's going to get you the best rate. It's going to get you the best terms. It's going to get you the best monthly payment. In fact, it's going to allow you to buy more home if you have a better credit score. So rather than just trying to buy as quickly as you can, make sure you have these pieces of the puzzle in place that you're able to take advantage of the best terms in the market. On top of that, you want to have stable income. You want to have stable employment like we discussed earlier. And if you don't have that reserve, that 3 to 6 months of your monthly mortgage payment and your household expenses once you pay your down payment and your closing costs, then you should be waiting until you have that money. Because the last thing you want to do is go and buy a house, something happens, and you don't have any additional money, right? If you think buying a home is stressful, wait until you buy a home and then you don't have the funds to do repairs or live your life, or your house poor because you put everything into that house. So I'd rather you wait to become a homeowner, miss out on some appreciation, maybe miss out on some opportunities, if you will, by focusing on improving your situation rather than rushing into the home buying process. And another time you might want to wait is if you're buying a home within 100 miles of owning another home. Say you already own a home and it's a conventional loan, you want to buy another home, this time you want to use FHA. Well, unless you can qualify for both homes with your current income without using income from that departing residence, then you should wait. And the reason is because FHA is not going to allow you to use income from a departing residence if that home is within 100 miles. In fact, if you already own an FHA loan and you want to do another FHA loan, you've got to be at least 100 miles away to buy that second property using an FHA. So in the case that you're trying to do either of those scenarios, it's better off to wait until you have more money to do a conventional loan, because otherwise the financing is going to be very, very tough to get approved. And the other time I believe that you should wait to buy a home using an FHA loan or really any other loan out there is if you're not comfortable with the monthly payment and you're counting on something to change in the future to make that more affordable, right? So say, for example, you're buying using an FHA loan and you're thinking, hey, I'm only going to have this for a short period of time. I'm only doing this, in the interim until I get that large check from my rec, from the attorney because that's settlement. Or I'm waiting on interest rates to drop so that I can refinance and get a lower monthly payment. Then it will make sense. No. You shouldn't be buying a home in this market or any market if you're not completely comfortable with that monthly payment, taking everything into consideration. So with both sides taken into account, do you feel like you should be buying a home right now? Do me a favor and let me know in the comments. And also, if you found any value in today's video, do me a favor and hit that thumbs up. Consider subscribing to the channel to stay updated on more FHA content. And lastly, if you're wondering how debt to income ratio and mortgage insurance impact your ability to qualify, do me a favor and check out this video here.